A strong reading could be positive for the dollar and the stock market, while a weak number might raise concerns about a potential economic slowdown. Investors' confidence in risk assets like Bitcoin continues to grow. You need to consider that we are having here a clear downward structure. Hey everyone, this is Isaac Martinez, your trader and analyst here at Achieve. In today's video, we're going to dive into the biggest financial news of the week, analyze the most important economic events, and take a look at the key trading patterns shaping the markets. So stay tuned to get the insights you need to stay ahead in your trades. And as always we do in this channel, we need to start with the economic calendar for this week. This Monday, we will have two important events that could move the market. So first, in Europe, the consumer price index in Germany will be released. This data is crucial as it indicates how prices for goods and services are changing in one of Europe's largest economies. A strong increase in this index could put pressure on the European Central Bank to adjust its monetary policy, which in turn could impact the strength of the euro. Next, at 12:55 p.m., we have a speech from the chairman of the U.S. Federal Reserve, Jerome Powell. When Powell speaks, markets pay close attention because his words can give us clues about whether the Fed plans to raise or lower interest rates in the future. This is critical for both stock and currency markets, as the Fed's decisions have global economic implications. For this Tuesday, the focus continues on Europe. At 4 a.m., the core inflation index will be reported, which is similar to the general consumer price index, but excludes more volatile items like food and energy. This report is important as it more clearly reflects inflation in the region, influencing the European Central Bank's decision. In the US, we have two key reports at 9 a.m. First, the ISM Manufacturing Index, which shows whether the manufacturing sector is expanding or slowing down. A strong reading could be positive for the dollar and the stock market, while a weak number might raise concerns about a potential economic slowdown. At the same hour, we also have the job openings report in the US, which measures the number of available job positions. A decline in job openings could signal a cooling labor market, raising concerns among investors. On Wednesday, 7:15 a.m., the ADP non-farm employment change report will be published, an important indicator for anticipating the official employment data from the US, to be released later in the week. If we see the labor market continue to create jobs, it could be a good sign for the economy. However, if job numbers are declining, it might heighten recession worries. Thursday, October 3rd, US unemployment claims will also be released today at 7:30 a.m. This report tells us how many people filed for unemployment benefits last week. An increase in claims could signal that more people are losing their jobs, which is not a good sign for the economy. Conversely, if claims remain low, it indicates that the labor market remains strong. Friday, October 4th, today is a key day for the market, and it all starts at 7:30 a.m. with the release of the US employment data, including the change in non-farm payrolls and the unemployment rate. These reports are crucial as they provide a clear picture of the health of the labor market. If many new jobs are created and the unemployment rate remains low, it could be positive for financial markets. However, if the data is weak, it may increase fears of an economic slowdown. And for the next segment, here's what's making waves in the financial world right now. Bitcoin has regained momentum in the early hours of Friday after the release of the August Personal Consumption Expenditures Index, which is the Federal Reserve's preferred inflation indicator. This index showed a monthly increase of just 0.1% below Wall Street's expectations, generating optimism among investors. This data has reinforced the expectation that the Fed might announce a 50 basis point cut in interest rates at its November meeting. This has led to an increase in Bitcoin's value, as investors are bidding on risk assets due to the possibility of more flexible monetary policy from the Fed. Matt Mena, research strategist at 21 Shares, explained that the lower than expected PCE figures have strengthened the positive sentiment surrounding a more dovish Fed, meaning a less aggressive stance on interest rates. This has been very favorable for Bitcoin, which had already anticipated the good news, closing above 65K, a level not seen since late July. Mena also mentioned that investors' confidence in risk assets like Bitcoin continues to grow, with expectations that BTC could once again test the 68K to 70K range. For retail investors, this is a good time to increase their exposure to risk assets, as history has shown that Bitcoin tends to rally around the years when halving occurs. Additionally, global factors such as recent liquidity injections from China and interest rate cuts are also helping to improve market liquidity, which has historically been related to rising Bitcoin prices. Finally, it is important to pay attention to the evolution of the monetary policy and the upcoming US presidential election in November, as both events could have a significant impact on the markets. For now, the crypto market continues to show strength, and many analysts anticipate that Bitcoin could reach a new all-time high in the near future. In other news, last week, gold reached a new high of $2,685, but closed at $2,650 after a report showed a decrease in inflation. Analysts are divided. Some believe that gold will continue to rise, driven by global uncertainty, while others think this increase is temporary. Kevin Grady pointed out that price corrections can be beneficial and that the impact of the elections will further complicate the timing for gold to surpass $3,000. Next week, the non-farm payroll report will be released, and the market will be paying close attention to what Federal Reserve Chairman Jerome Powell says. And now we're going to focus on the charts, and as you know, we always start with the US dollar index. With this, you will know what could happen to other markets because most of the assets I trade are related to the US dollar index. So to remind you, last week we have established this rejection block and also its more sensitive point, which was 101.315. Price only reached partially this fair value gap, as you can see here, and after this, price was rejected and it went to a downward movement. Then the price tried again to go up, but it was only a structural failure. So after this rejection, we could see that the price made a lower low. With this lower low, you need to consider that we are having here a clear downward structure. So it is more likely to keep this structure for this week's projection. So if you are bullish with this asset, the US dollar index, it is possible that we could reach the same target, and maybe if the price continues to rise, we could see that it could reach the last target, which is 101.665. On the other hand, if we are talking about bearish targets, the first is 100.157. Next one will be 99.578. And don't forget that between these two targets, we have the famous psychological target, which is 100. So if we see that this support gets broken, it is highly possible that we could see strong upward movements from several assets. So next asset, as you know, is SP500. We reached a new all-time high last week, which was located at $5,767. After this, you need to consider that for the price, it is difficult to continue an upward movement. The possibility of a downward movement is higher than an upward movement. So if you're trading the SP500, take into account that you are near the all-time high. And if you go long near the all-time high, it is highly possible that you could lose that trade. Maybe the most intelligent decision is to wait for a correction, and then we could take a new long, or we can buy again the SP500 in a certain level. So for these targets, for these corrections, maybe one of the best targets maybe for this week is 5,615, 5,517, and 5,402. It is really difficult for the price to keep falling down to these targets, because when the price reach this target or this bearish target, it will have enough gas, it will have enough liquidity, so it is difficult for the price to not react to those objectives. On the other hand, if you keep buying the SP500, your target for this week will be the all-time high, which is located at this point. Next, Euro US dollar. We need to take into account that the last week we reached an objective which was located here at the 1.11899, and this week for the bullish targets, I think the first one will be 1.12140, and the last target would be 1.12758. If you are selling this week, the objectives for this week would be 1.11216, 1.10832, 1.10613, and 1.10375. I don't think I also here and here also I don't think price can continue a downward movement if it reaches these targets. So keep in mind that if the price reaches any of these targets, it is highly possible that price will react with an upward movement. And why is that? That's because when price reach targets which are related to liquidity, price gets gas, and with the gas price can react. And how it reacts when a bearish target is reached, price reacts with an upward movement. And finally, we are seeing Bitcoin, one of the assets that I trade most. So we have reached several targets for this week. I have already raised them, but take into account that if the price continues to grow, it is most likely to see Bitcoin reaching $66,800, which is located a target at this point. And well, if the price continues to rise, if it maintains this clear upward structure, maybe, just maybe, we could see Bitcoin above $7,000 for this week. But just take into account that Bitcoin could have a correction because we see just upward movements. Maybe Bitcoin could make a correction. Bitcoin could reach $64,000 or maybe $62,000. We have several bearish targets for this week too. So take into account these targets, and if Bitcoin reach any of these targets, it will be difficult for the price to keep falling down. So remember that before buying again Bitcoin, maybe I will wait for a correction at least to the $64,000 to make a new long and try to catch this new upward movement with Bitcoin. Thank you for joining us today. If you found this analysis helpful, please give us a thumbs up and subscribe to our channel for more insightful content on finance and trading. Also, don't miss out the opportunity to trade several assets like metals, stocks, indices, and cryptocurrencies. Register in our broker XShift today and take your trading to the next level. We appreciate your support and we look forward to seeing you in our next video. Happy trading!